Mic check. 1 2 1 2. I hope everyone likes this video. It's a little simple. I'm going to do an investment review of what I bought today, and I'm going to tell you why. So it should be fun. Why I bought YMAX, LFGY, YBTC, and SBIT before the ex-dividend date. Warning, this video is for entertainment purposes only and not investment advice. I'm not a certified financial advisor. This is an investment that I made today, no one else. So the investment I bought, 43% YMAX, that's a starter position. Now, because it's a starter position, I'm not really too jumpy to hedge it, because right now cash is the biggest position to hedge. I want to keep using my dividends to buy more YMAX and growing my weekly dividend. 33.3% LFGY, 16.3% YBTC, and 7.4% SBIT, which is a 2x leveraged inverse Bitcoin ETF to hedge. So the first investment was 43% YMAX. I noticed that excluding the expense ratio, YMAX outperforms SPY and pays a 61.6% dividend yield. We can see that blindly averaging into YMAX is about a 24.3% total annualized return since inception, whereas SPY is only 20.88%. Now, while YMAX has a much higher expense ratio than SPY, it has a massive weekly dividend, whereas SPY has a very measly quarterly dividend. So for those people who think that it's impossible to get dividends without beating the market, that's certainly not true. When we look at YMAX, I like that YMAX has a broad swath of stocks in its portfolio, and some of the stocks like Moderna are not doing particularly well. But what's Moderna? Moderna is a black swan stock. So they've got a nice blend of beta. They've got a nice blend of stocks that, even though they're not performing well right now, if the market really turned around, MRNY could be a black swan stock, if that makes sense. Because obviously we saw what happened the last time Moderna had a massive bull rally. So that was the biggest position. I'm not really directly hedging it. Now, SBIT does kind of indirectly hedge it because YieldMax has added quite a few crypto names, Coinbase and MicroStrategy being the biggest ones, to its portfolio. And so those are in YMAX. So I own a lot of MSTY, and I didn't want to keep buying MSTY because then I would have too much MSTY, and MicroStrategy is very risky. I talked about SMST in a recent video. Go watch that video. That's a great video for showing how I could directly hedge MSTY. But in this account, I didn't want to keep adding MSTY, but I do like the idea of adding it at a smaller allocation. I think about 4.3% through YMAX. Philosophy. I already own a decent amount of MSTY, which yields 100%. Instead of being too overweight MSTY, I'm going to add to it and diversify into other YieldMax funds through YMAX. Devil's advocate of YMAX, the expense ratio 1.28. Nothing to sneeze at. SPY's expense ratio is 0.09. But SPY's dividend is next to nothing, whereas this is a 61.6% dividend paid out every week. Position 2, 33.3% LFGY, and it holds MicroStrategy, Coinbase, etc., yielding 68.16%. So the reason that I like this is because, again, there's that idea where Coinbase and MicroStrategy are being added to. I already own a decent amount of CONY, and I already own a decent amount of MSTY. But now I can add smaller allocations that are more diversified through this ETF. And I can also hedge this directly with SBIT, which we'll get into. But this has a really high yield, and it has a really high yield that can't really be messed with. I love these extremely high weekly dividend paying yields of YMAX and LFGY, much higher than the next holding, position 3, which was YBTC. Now, YBTC has something going great for it. If I wasn't chasing yields, so to speak, YBTC would be kind of the infinite holding, and I would just hedge it directly with SBIT. Why? Well, because the alpha on YBTC is pretty insane. It not only outperforms the S&P 500, which is sort of an unfair benchmark because Bitcoin is more risky than SPY, but it's an out-of-the-money covered call ETF, so that also changes the dynamics of risk a little bit, or I should say a lot. But we see blindly averaging into LFGY versus YBTC. YBTC is the clear winner, whereas they're both tracking Bitcoin-related instruments. LFGY is arguably doing so with a much higher beta holding these stocks right here. So YBTC is kicking LFGY's butt. And so this would be an example of going for the alpha instead of the yield. YBTC also has a lower expense ratio of 0.95. Getting into these very high yielding funds, that expense ratio of 0.95 is going to be a real game changer. Position 4 was 7.4% SBIT to hedge LFGY and YBTC as well as YMAX indirectly. So SBIT is a negative 2x leverage ETF that tracks Bitcoin inversely. So in total, roughly, it was a 15% SBIT to 85% LFGY and YBTC hedge ratio. YBTC is more delta than a zero delta to Bitcoin, but much less than 1 depending on one's views of weekly out-of-the-money covered calls. So obviously Bitcoin is going to have a delta of 1. YBTC has a lower delta than that, probably 0.6 or 0.7. And so I don't need to fully hedge Bitcoin because YBTC itself is a hedge selling all of those out-of-the-money covered calls. I believe about 4 or 5% per week is going to be the cap. That's not too bad. That means the Bitcoin has to go over 5% in a week, which it certainly will. At some point, we've been in the choppiest period ever. So don't fall asleep at the wheel has been what I've been telling myself. YBTC has more delta than 0 to Bitcoin, but it's much less than 1. So I believe that 15% SBIT with YBTC and LFGY is pretty reasonable. I'm going to catch the big short, and these dividends and these dividend yields on LFGY and YBTC are going to explode if Bitcoin's volatility expands, whether it's to the upside or the downside. So LFGY also sells options against its positions. That's going to lower the delta as well. Will 15% leverage ETF SBIT be enough to hedge LFGY and YBTC? Let me know in the comments below.